Hello there, my friends. Chris Marcus here with you for another episode of Inside the Markets. And today we're fortunate to have a return guest on who can make sense of a lot of the wild things that have been happening lately. And that is my good friend, David Moadel, who is part of Portfolio Wealth Global, also has a great YouTube channel called Looking at the Markets, where he brings on some fantastic guests. So it's great to have his body of knowledge here and help us make sense of everything that's going on. So David, how are you doing today, my friend? How's it all looking over there?
Thank you, Mr. Chris Marcus. I appreciate it. And everybody who's listening and watching this podcast right now needs to go ahead and subscribe to Chris Marcus. He is your source of information. Just do it. Subscribe. You won't regret it. Thank you, Chris Marcus, for having me on. I appreciate it. I'm looking forward to this conversation.
Well, that's kind of you to say, David. Fortunately, we're lucky to have some good guests on who can provide information here. And to kick things off, one of the highlights or lowlights, depending on how one looks at it, of the past couple of weeks, we've heard Trump criticize the Fed before. He thinks they're raising interest rates too fast, and that's going to be tough on the economy. Half of this, latter half of that, I'd agree with. Again, we are at 2% a decade later, so I don't know if that's a fast hiking, but curious what your thoughts on that are, whether he believes that, whether that's political jargoning, or what's your take on that one?
Yeah, if people are thinking about or trying to anticipate what the Fed is going to do, what Jerome Powell is going to do, there's an old Who song, you may know this, where it says, welcome to the new boss, same as the old boss. You know that old song?
Mm-hmm.
The Fed hasn't changed, okay? We had Bernanke, we had Yellen, we had Greenspan and Volcker before that. Now we have Jerome Powell. It's the same. From Fed chair to Fed chair, it's the same regime. And now that we have a normalization going on in interest rates, bonds are extremely toxic. If anybody out there has bonds or is thinking about purchasing 10-year treasuries, please don't do it. It's the wrong market to be in. I hate to say it, but stocks, precious metals, and perhaps selected cryptocurrencies are the only games in town. You could also do some real estate if you know what you're doing and if you have the resources and the mindset to do that. But bonds as the risk-free investment are just not the way to go. Whether you have tension between the president and the Fed chair, it doesn't matter. It's not a good investment. It's going to go down in value. Zero interest rate policy and negative interest rate policy is old news. We're going to get back to higher interest rates sooner or later. We're already in the process with the more hawkish Fed in power right now. It was bound to happen. You can't stay at low interest rates forever, especially with inflation creeping up. Remember, bond yields have to keep up with inflation. Otherwise, nobody's going to buy them. Listen, I'm at portfoliowealthglobal.com doing the research. We've got a report. People can check it out, portfoliowealthglobal.com/bonds, BONDS. It's got a lot more information than I can give you right now. But whatever you're doing, if you're thinking about getting into bonds, this is not the time. As far as trying to anticipate what the Fed is going to do, just count on inflation going up and therefore count on the coupon rates, the interest rates on the 10-year yields to go up in the future. So if you buy now, they're going to become worth less and less and less. It's a toxic investment.
Yeah, I appreciate you pointing that out because it's almost been bizarre in a sense where you hear when the credit's being printed, interest rates are being lowered, that how it's going to make everything great and everyone's going to get gummy bears and candy. And yet no one mentioned, certainly Bernanke didn't in his op-ed, about what happens when the rates go up. And now you have all this paper out there that someone is going to have to take the loss on.
Yep.
Unless they do keep interest rates at 0, 1, or 2%, which means essentially printing the currency into oblivion. So for folks who might be in the bond market and looking at alternatives, where are you suggesting to your clients now, or perhaps some better spots to be in?
Sure. Well, right now we're at a volatile spot in the markets. You've got these 1% or greater moves in the major indexes on a daily basis. Okay, that is not normal and that's not how it's supposed to be. But does that mean that we're going to have a stock market crash anytime soon? I don't think so. I think the bull market, although it's old, still has some life left in it. I recommend having some dividend paying blue chip stocks. Now, having a dividend is a good sign. The fact that a company can afford to give a dividend, a healthy dividend, is a really great sign for the company. Although understand that dividends are not free money. I'm not sure if everybody understands that. I know you have a sophisticated audience, Chris, but a dividend payment is not free money. They take that same amount, that cash payment that you get, they take that out of the share price of the stock. So it's not free money, but over time, these dividend payments do tend to add up. And again, it's a healthy sign that they are willing, that the company is willing and able to provide a reward to the investors for believing in them, for
Right.
holding on to them for a while. So I believe in getting some blue chip stocks, some dividend payers. Yeah, the ones that Warren Buffett's into. Okay, he likes Coca-Cola. I like Coca-Cola. All right, I like Apple. I like Amazon. I think Jeff Bezos is the genius. I like Starbucks. Those are just a few of mine. I want people to invest in companies they believe in, though. Okay, I'm not a licensed or registered investment advisor. I cannot tell people what to do and what not to do. I could tell people what I believe in. I also believe in identifying some under the radar opportunities. These are not lotto plays, okay? I'm not a gambler, I'm an investor. I'm a trader sometimes, mostly I'm an investor, never a gambler. And so I like under the radar opportunities that have the potential to be the next Amazon, to be the next Apple, Microsoft, whatever it is. See, if you only buy stocks that have already gone up 1,000%, all right, what's the likelihood of that stock going up another 1,000%? Not too great. But if you can find those stocks that have a great business model, great leadership, super profitable, maybe they pay a dividend, maybe they don't. But someday they'll be able to because they have the potential to go up a lot. All right. We have a newsletter, portfoliowealthglobal.com. If people sign up for that with their email address, no obligation, they're gonna get these 1,000% gainers that we've given out before. The main researcher, I'm one of them, but the primary researcher at Portfolio Wealth Global, his name is Tom Beck. He became a multimillionaire at age 33 in real estate. Now what he does is he does research and publishes this newsletter that people can have access to all the research that he's done. He's picked some huge winners. Also in the cryptocurrency space, he's picked Cardano at 4 cents. Would have been nice to get in then, right?
Right.
He picked Ethereum at $30. So, you know, we're going to keep bringing those multi-baggers. So if people want that kind of information, feel free to sign up. But otherwise, some stocks, no bonds, please. Some precious metals, because I want to have something that's a store of value. I want to have something that is going to retain its value and even go up during a market crash when this old bull market finally dies, okay, which it will. Life is cyclical and so are the markets. I do want to have some selected cryptocurrencies, but I want to be careful with that because there is volatility there. I also like to have some marijuana stocks, and we could talk about that as well. I'm super excited about that industry. But if people want a particular report on what's in Tom Beck's portfolio, they can go to portfoliowealthglobal.com/portfolio. That's /portfolio. They can actually get a guide on how to diversify with the stocks, the precious metals, the cryptocurrencies, the under the radar opportunities, all the above.
And we'll have the link to that below the interview. And speaking of which, one of the stocks you mentioned in there, Amazon, which actually I've been thinking about a little lately, and especially seeing a lot of volatility in some of the tech stocks recently, which led me to look at the chart of Amazon, which I hadn't done in a while. And I saw back in 2008, I believe in November, it was around $42. And now up at $1,750, $1,800, wherever it's sitting today. So I'm curious how you would approach something like that, where, you know, some of these, when they've already had their big run, Obviously if a company is on the verge of creating more value, then, there's always a fair value somewhere. So that makes a tricky dynamic from my perspective of some of these tech stocks. How would you approach something like that with Amazon, where I get that you want to look for the ones that have that kind of return potential? Although, what do you recommend to folks for some of the ones that have already had a lot of movement in the price?
Great question. Yeah, it's funny how PE ratios become almost meaningless with a tech stock like Amazon. My father a long time ago taught me that you want to look at the PE ratio in order to to find the proper valuation of a company and find out whether it's overpriced, underpriced, or just right. But this was before Amazon existed and before a lot of these tech stocks rose in value so much compared to their profits. Look, Amazon is highly profitable. It passes what I call the grandma test. If your grandma and my grandma has heard of Amazon, which they probably have, that's a good sign. That means that they have name brand recognition all over the world and total saturation. They have a stranglehold on the market. Starbucks passes the grandma test, all right? Apple passes it. Whereas some other, no-name company, a lot of people come to me, they say, Dave, there's a company over in Australia, and my friend told me that I should buy it. I don't know exactly what they do, and I've never heard of them, and nobody I know has ever heard of them, and they have no business model that I know of. But should I buy it? And I'm like, come on. Know what you own, okay? Whereas with Amazon, you know what you own. You probably use it. I use it all the time. It passes the grandma test. It has a great leader. I think Jeff Bezos is amazing. There's a reason he's one of the richest people in the world, if not the richest. It changes every month or so. I believe that PE ratios I say almost, don't matter when it comes to an Apple or a Microsoft or an Amazon, all of which are in my holdings at various times. Okay, so if the tech stocks get beaten up, those valuations will be more reasonable. But when my father taught me a long time ago to look for PE ratios under 20, again, that was before Amazon. So don't expect that with an Amazon. Just look at, is it profitable? Is everybody using it? Yes and yes. Okay, do they have a great business model? Do they have great leadership? Yes and yes. So I'm in. I'm not in at every single moment. I buy the dips. I like to buy the dips with an overall uptrend in a great company. Warren Buffett invests in great companies at a fair price. That's what I do. Excuse me. Amazon fits that mold. Not all the time, but it's still buyable. You just have to look past the PE ratio sometimes.
Right. And in terms of factoring in that at least interest rates rising now, indication the Fed continuing to hike, we'll see if they change course. Again, Trump doesn't seem to like that, although is there any sort of hedge that you like to put in place? That's one of the things that concerns me with some of the stocks where, a lot of it is dependent on the Fed. If they keep printing money, then there's a case to be made that it's more likely the stocks go up. I've been concerned lately and wondering if some of this volatility is a direct reflection of the money being pulled out of the system. So for folks who do want to be in the stock market, how do you like to hedge that or address that? So in case, if the case that the rates do continue to go up, that they can have some protection in place there.
Yeah, rates are going to go up. Sure, the 10-year yield is going to fluctuate. Right now, it's fluctuating between 3.1%, 3.2%, whatever. Okay, remember back in I'm sure many people in your audience remember back in the Paul Volcker years when he was a Fed chair. Yep. You saw the 10-year yield go above 10%. So 3.1 or 2% is immaterial. It's capable of going much higher. If it gets to a certain rate, let's say about 4.5%, 5% in the near term, which is entirely possible and probable in my estimation, then it'll be a genuine threat and competition for this volatile, risky stock market that we're in. I'm not saying don't own stocks, just own the right stocks. But don't you don't have to go 100% into equities. You can have some precious metals. You can have some gold and silver. We've got silver. Whenever silver goes below $15 an ounce, I'm looking at it. I'm looking at it very carefully. When gold goes below $1,200 an ounce, I'm looking at it very carefully, and we're there. I love gold and silver bear markets because those are opportunities. We're having one right now, and they don't happen that often. And so you can have it not only as an investment that will appreciate in value, you can have it as a hedge. Look at any chart. Go ahead and superimpose gold and silver versus, let's say, the S&P 500 or the Dow or the NASDAQ or the Russell 2000. You'll see how well they held their value during those times of volatility in 2008, in 2000, in 1987, October, when it was Black Monday, and the Dow Jones went down 22.6% in one day. Could that happen again? No one thought it could ever happen then.
Right.
Could happen just yesterday. We saw the major indices. We saw the S&P 500 go down 3% in one day yesterday. It was just horrendous. So you got to protect yourself. Gold and silver allocation, I think, are great. Also, selected gold and silver stocks is fine too. In fact, you can get more yield out of those, and you can get more bang for your buck a little bit quicker. Look, we have a report actually on that, portfoliowealthglobal.com/bear, B-E-A-R. This is the most comprehensive gold bear market manual. You're going to learn 11 different strategies for controlling your portfolio during a market downturn. So you'll have a better chance during boom times. Why not access this information? Tom Beck put this report together. He's been spending a lot of time on this. I've read it. I use it. I read it I use it as a reference manual, so you might want to check that out. All I'm saying is that avail yourself of the best information. You don't have to just get into risky stocks because, as we saw yesterday and as we will see again, it is a risky stock market. You want to diversify. Be ready for the bear market when it happens or before it happens. Don't start thinking about it when you're in the midst of it because then it's too late.
Yeah, and actually I'm excited to get that report. Actually sounds pretty interesting. A few things you mentioned there, especially with diversification. One of the lessons I'm perhaps still learning, I was trained as an equity options trader, although it was interesting. If you're familiar with those Jack Schwager Market Wizards books, Jeff Yass, who was the founder of the shop Susquehanna that I used to work at, where very trading focused mentality, yet in his interview, he mentioned how his father once told him that if you're not diversifying, you're literally throwing your money out the window. So I appreciate you bringing up those points because obviously when there's a market that you get really excited about or you're knowledgeable about, that's a great starting point, although mixing it in because even as certain, to me, the fact that silver is below what it costs most of the miners to get it out of the ground, amongst other things, you'd think, at some point we're going to see the move up. Of course, the market has its own timing on these things. Real quick, I couldn't resist since you did mention Paul Volcker. I just had to read this. I came across it last night because I guess he's got a memoir coming out. And a quick snippet, Mr. Volcker recounts being summoned to meet with President Ronald Reagan and his chief of staff, James Baker, in the president's library next to the Oval Office. Reagan didn't say a word, Mr. Volcker wrote. Instead, Baker delivered a message. The president is ordering you not to raise interest rates before the election. And he mentions, I was stunned. I was later surmised that the library location had been chosen. Unlike the Oval Office, it probably lacked a taping system. So interesting, just again, thinking about some of these connections between the politics and the Fed, and certainly fascinating to see how that will play out. And along the lines of, to go back to what you were saying before, though, you mentioned Amazon, Starbucks, and also cryptos, and I can't resist letting that pass. Obviously, there's been the rumors that Amazon or Starbucks might begin accepting cryptos as payment, which I've thought could be a big step because maybe the technology is as good as a lot of people believe it will be. I personally tend to lean towards that side, yet until the rest of the world starts realizing that and actually using it, that to me seems like perhaps what could start that next leg up. Curious, any thoughts or anything you've been hearing about that? Does that make sense that that's something they would do? And then again, any other thoughts on the cryptos in general? But curious to see how you feel about that one.
Sure. I think it's inevitable that retail outlets like Amazon, which is, has saturated the market. Everybody, like I said, it passes the grandma test. Everybody's using Amazon. Excuse me. I think it's inevitable that there will be a button on there someday that says Bitcoin accepted,
right.
Ethereum accepted here. Press here to pay with it. Okay. When it will happen, no one knows, of course. But Jeff Bezos has expressed indirectly interest in cryptocurrencies. It's in his head. And if it's in his head, it's going to be on the site at some point because he is the mastermind behind it. Starbucks. Who goes to Starbucks? A lot of millennials. And not only millennials, of course, but the millennials love cryptocurrencies, and which I think is great. It's funny how a lot of people, a lot of analysts, a lot of old school analysts love to pick on the millennials. I think they're very savvy. I think they're ahead of the curve. They understand the value of the blockchain and the value of cryptocurrencies. They're shopping at Starbucks. They want to be able to use their account, their wallet, their cryptocurrency wallet on their phone to pay for their latte at Starbucks.
Yep.
It's inevitable. It's going to happen. We just don't know if it's going to happen in 2019, 2020. But you want to get in if you're going to get in. We're not telling people to or not to, but you don't want to get in after it's been reported in the mainstream media. Okay. Right. You start thinking beforehand, whatever you get into. When it's under the radar. I keep mentioning that theme. That's important. So yes, I believe in the blockchain technology. Therefore, I believe in the currencies, some of them, that are based on it. Does that mean I believe that people should load up on any current cryptocurrency? No. If it's number 127 on CoinMarketCap or World Coin Index, you're taking on a lot of risk. If you stick to, let's say, the top 10 or at least the top 25 on CoinMarketCap or World Coin Index at any given time, at least you're into what I call the blue chips of the cryptocurrencies. Right. The ones that have that, they may not pass the grandma test, but at least they have the name brand recognition. And so if you want to get in now, if you understand that the correction that we've had in 2018 in the crypto is the 12th one, the 12th market crash for cryptocurrencies. It feels bigger, but percentage-wise, it's not. We've been through this 11 other times. What do you think? It's just going to not come back that 12th time? Of course it will, at some point. Either that or it's going to go to zero. But for cryptocurrencies to go to zero, for Bitcoin to go to zero, the blockchain would pretty much have to cease to exist. Is that really going to happen? I think it's a lot more likely that, yes, Amazon will be using cryptocurrencies at some point. Starbucks will be using cryptocurrencies at some point. So I'm bullish on it overall.
Yeah, and interesting how you mention it's different, maybe might not pass the grandma test, which doesn't necessarily mean that that can't be a good thing. I mean, it's just a different type of investment for a different type of, or maybe a different part of the portfolio or a different investor. Mm-hmm. Yet one of the things I've thought about over the years is that, especially the markets that no one talks about, that people don't understand, there can be more risk, often more volatility. Yet if you take the time to really do your homework and look into what's going on, can be edge there if you understand it better than the other folks. So are there any particular cryptos? Again, I know we won't give licensed financial advice right here, but just names that you've seen a business model that makes sense that, again, from my perspective, I think as far as the prices have dropped, if there are names people like, that this, in my opinion, is a good time to get some of them while the price is lower. But are there names that you feel people would be well served to look further into that you've been impressed by?
I like Ripple. It's a volatile one, but it's also a low priced one.
Okay.
And so it has that explosive potential. It's going to be tougher for a $6,500 asset like Bitcoin to make those same types of gains that we saw in 2017. But I think it is possible with Ripple. I think it's possible with Cardano, which is also very cheap. But you notice that they all tend to move together, don't they? If you look at the top 10 or top 25 cryptos, you're not going to see some of them, you're not going to see half of them down 20% in a day and half of them up 20% in one day. It's not like that. They all tend to move together. I'm not saying it doesn't matter which one you get into, but I tend to go for some of the lower priced ones if I want the bigger gains because they have that more explosive potential. You just have to be ready to ride that roller coaster. If you want something a little safer, if you want more of a Coca-Cola type thing rather than a penny stock, so to speak, then you could always just stick with Bitcoin. You've noticed that usually when people trade cryptocurrencies on exchanges like Binance or wherever, they'll trade it and then they usually change it back into Bitcoin at some point or Ethereum. So if you stick with those two, you're probably pretty safe. So it's a question of, do you prefer safety, relative safety, or do you want the more explosive potential? I tend to mix the two. So you can even diversify within cryptocurrencies.
Right. Yeah, which is a wise idea. Again, I tended to think it'll be similar to what we experienced with some of the internet stocks, where on one hand, they rise and fall as a whole, yet over time, the ones that are creating value are the ones that you want to be holding. So appreciate you giving a couple starting points for folks to look into.
Sure.
And just to wrap things up, if you could let folks know where to look into what you're doing and get some of those reports. Again, we'll have the links below, but anything you can share there so folks can find you.
Well, I'll tell you what, if people want to get the newsletter, they can sign up, no obligation, portfoliowealthglobal.com. You'll get all of my research and Tom Beck's research. You get the latest on that. If you want all of our best reports on one page, go to portfoliowealthglobal.com/money, MONEY. And just to recap, we have the comprehensive gold bear market manual at portfoliowealthglobal.com/bear, BEAR. You've got Tom Beck's personal guide to diversifying at portfoliowealthglobal.com/portfolio. We have a report on crash protection at portfoliowealthglobal.com/crash, how to protect yourself in an aging bull market, because it is now officially the oldest bull market that the U.S. has ever had in the S&Ps, and /bonds, if you want some nice, better yielding alternatives to bonds, which if you buy them now are just going to go down in value as rate normalization takes hold. So my name is David Moadel, and if people want to contact me with more questions, I'm at davidmoadel@gmail.com, last name Moadel. I don't blame people if they get it wrong, but you can't reach me by email if you get it wrong, so Moadel. And feel free to ask me any questions on that. I can provide some great resources for you, whether you're just starting out or whether you're more advanced or intermediate, wherever you're at. I can help you to find a course of thinking that is hopefully right for you. While I cannot tell people what to buy or what to sell, I can help them to change their mindset, and that's really a big step in growth on your journey as a trader or investor.
Yeah, and I appreciate that you offer that, because again, what I've found to me makes sense as a good template is that people have their own ideas, do their own research, think what makes sense. But then if you have someone, I like how you don't say, this is what you should buy, this is what you should do, but really just say, hey, here's some things to think about. Here's what maybe you have considered or haven't. And just guiding the mindset so that people can make their own decisions feeling comfortable. So I would encourage folks to reach out. And while we won't find you in the junk bond aisle of the supermarket, you can find David Moadel at Portfolio Wealth Global. And with that said, I appreciate you coming on. I think we're in front of some wild times in the market. So thanks for helping to clear up what's going on a little bit. And we'll look forward to checking in with you again soon, my friend.
Thank you, Chris. Anytime, sir. Thanks a lot.
All right.